a lot of the inflation we're dealing with, not just in commodities, has some structural drivers which might not disappear in the next 6 to 12 months. They might linger for years. We always say, like, the decarbonization, deglobalization, and the fight on income inequality drive, which has started pre-COVID, that all of that increases the risk that inflation will be higher in the coming years, but also inflation volatility will be higher. So I totally agree. I think to some extent, some of the issues we're having here that are causing the inflation, they won't disappear because of a recession or a growth slowdown.
And of course, we're watching the outcomes of all those external factors playing out in NATO at the moment. We'll have to wait to hear more about the impact that's going to have on the outcomes of what's happening in Ukraine. However, let's talk a little bit more about that growthy part of the market. I like your use of that word there. When we think about investor sentiment and psychology at the moment, what is the hammering down of growth stocks that we've seen in recent weeks and months? What kind of impact is that having on the average equity investor in a growth stock?
Well, listen, I mean, you asked the question and you know the answer. It's been very painful. I think we're dealing with some of the biggest drawdowns in that space for a long time, since the tech bubble, really. And it's in particular, of course, in the non-profitable tech areas. But that's the issue for a lot of these areas that have very high EV to sales type valuations. They don't have the support in a bear market to stabilize as easily as cash flow generative, high dividend yield, strong balance sheet, kind of more mature companies. And that makes them very risky. So if you look in the tech bubble, you peaked on an EV to sales ratio of 4 times. And the same was true during the COVID crisis. And in the tech bubble, you fell to an EV to sales ratio of 1. So you see, it's been an enormous derating. So we've gone from 4 to maybe 2. So I think we're still above the trough, which you've seen during the tech bubble. And that makes that space still a bit vulnerable. But we certainly, in our client conversations, hear a lot of institutional investors looking at the quality growth buckets. And they just say there's a lot of value emerging for longer term investors. So the tricky part now for retail and for any investor is to try to avoid things that don't have a valuation floor, that don't have a fundamental story that can stabilize them in the next few years, and really focus on the quality part.